Welcome back to a trading day. It is 1:42 p.m. Eastern Time. We're live for June 20th. We have a little bit of a sell-off today led by semiconductors. Let's talk about it. I just want to pop in for a little market minute, do a live all market update. So let's have a look at everything. Here's the heat map currently. We have about just over 2 hours until closing bell. Apple down 2.3%, Nvidia down 3.11%, AVGO down 3.75%. Look at your semiconductor space down, 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 down. Interesting how that's the only real area that's down, but look what that's doing to the overall market. We have 550 on the SPY that is down in the day, just over $4. Here is my peak right around 550. I did close out a futures contract for the long side. I bought in on Tuesday. I think price is trading hovering around 546. I bought in with a I think I bought in a 550 call, and the expiration first was for tomorrow. So I turned like I want to say a 75-cent debit into like a $1.50 credit this morning when we first popped up to 550. Closed it out, took some profit. Glad I did. Obviously, the day's been down. So 550 down towards 545, a decent little move to the downside. I would love to see a little bit more downside if that's possible for tomorrow. I do have a trade that's running. It is a call condor that I'm watching pretty closely. Here's what it looks like on the SPX. If there is a chance that I can get another 20 to 30 points to the downside, this is kind of my optimum window for this SPX trade tomorrow to close out for a nice win. So I collected about 45 cents in the trade, and there is kind of a 10x return if I can get this thing back within 54.40 area. So if we drop another 20, 30 points on the SPX going to later today or tomorrow, that would be pretty sweet. I'm actually up on the day about 9 grand, which isn't too bad considering the market's down. But the nice thing is I think we are positioned for. I mean, I'm positioned for this. I mean, I'm pretty bulletproof and fairly diversified. So having a little dip on SMH or dip on Nvidia, it's kind of nice to see it, to be honest. 141 pulling back to 131. I mean, you're down 3% today. I would certainly like to see if this is more of an interim top, at least in the near term. I mean, part of me literally yesterday was talking to my students in my training rooms, talking about, well, should I just put like $10,000 or $20,000 in on the SPY to participate in this, this melt up? And the good thing is I just sat on it, marinated on it for the day, and obviously I'm not doing that. So I still like buying low. I still like buying dips. I still like a lot of things that don't entail feeling like you got to chase these highs. But it is crazy. It's crazy to see Nvidia after a 10-for-1 split still push $35 to $40 to the upside. And at least today is a dose of reality. So take a look at SMH. That's your semiconductor ETF, down the same amount. About 3%. Same thing as Nvidia. It's probably mostly carried by Nvidia. We take a look at some other semiconductors. I have a watch list here in my Tasty account. Let me go watch list semiconductors. Drag these over here. Just on the day, everything is down. So change today. Let's see what is down the most. LAES down 11%, ARM down 9.41, Micron down 6.27, Qualcomm 5.94, Microchip is down 4.68, AVGO 3.91, Nvidia 3.2. What are some other household names? SMCI down just shy of 1%. MRVL up a little bit. Intel up a little bit. Interesting. AMD up almost 4% today. That's quite the change. AMD going a little counter trend. Interesting. NASDAQ different record highs as investors take chipmaker profits. There you go. Energy sector rebounds. Yield rise was driving markets Thursday. Cool. So yeah, I just want to focus on a little bit of a all markets update. Let's do a little weather report. See how things are going. Thus far for the week, totally fine. Wise, I had a trade on the Aussie New Zealand that's doing pretty well. We have a pocket that's filled. I moved the stop loss to break even. If anybody's in my flex room or watching this recording, we had a trade in. Let me check my flex doc. We put in a trade around 108.20, I believe, 108.30. So we're up about 40 or 50 pips right now. 108.39, currently up about 35 pips. So if you want to go to break even, that's okay. I like this trade as is. I'm still just giving it a chance. I'm not sure if the Aussie New Zealand is going to, respect this range where this is a rally, pullback, rally again, and we come up to 110 and change, almost 111, or if this is a false break to the downside, false break to the upside, and this market just wants to form some type of possibly wedge. Maybe this is a low, this is a high. We start forming lower highs and higher lows, and it makes it even more decisive or indecisive. And perhaps it looks something like this. If we had a kind of an indecision wedge, that we have a wedge here, and then maybe we start the same type of thing in a different way. I'm not sure. So it's a tough one to read at this point in time. I said I would be much willing to buy. There's very willing to buy this trade. 104 lower, starting to build support levels. But right now I'm long, and I'm looking at this overall area as okay. So we had a fake out here, bit of a fake out here. But if this is a swing trade, there is a chance where the structure has changed. This recent high took out highs, took out highs, took out highs, and so I think if the bulls are going to maintain control, then we're looking for this to continue to head up towards 114. If I'm wrong and I get stopped out in this recent trade around that 107.50 zone, then that's okay. That's a tight stop loss, and I'll reassess the overall direction on the Aussie New Zealand. Let's take a look at the DXY today. Thanks for joining me for a quick all markets update. Dollar index up to 105.62. We're back on green, I guess green land for the dollar for right now. Daily candle up. Let's take a look at the currency strength chart. So we have CAD up, dollar up. Interesting. Swiss down. Yes, thank you. That helps a lot. Let me check something really quickly. That should be a big old swing of P&L on my portfolio builder account, my Swiss franc basket that I'm trading. Very happy to see that with, by far a lot of weakness. Did we have a surprise rate decision today? I know we had rate decisions for the Great British Pound and for the Swiss National Bank, but did they do anything? Aha! They cut rates. Unbelievable. They cut rates to 1.25. Nice. Well, there you go. That helps our position a ton. Let's see what this one. I'm going to look at my P&L here on Owanda. Just give me a second. That is fantastic. So let me take a quick look at the Swiss pairs. Aussie Swiss turned the corner nicely the last couple of days. Still some indecision, but hopefully this is leading to a trendline break and a higher low turning point. CAD Swiss is another one that should be able to turn aggressively to the upside. I did add in on this little wick low around 65.30. Again, I don't think this is necessarily the guaranteed bottom. But if we go, let's say we push up here, have a little bit of a flag, then I like this trade as another chance to add on or look into, now that we see the Swiss National Bank is cutting twice compared to other central banks, that's kind of a good thing. So this offers up a little bit of yield, offers some good technicals. I'm not playing the yen crosses when it comes to the carry trade stuff. I'm playing the CAD, the Swiss crosses because they technically are at some really good levels and they tend to respond and behave a little bit better than the Japanese yen. So anyway, looking good so far for at least a starting point to start getting a U-turn. Right here, it's almost perfect on the Euro Swiss, right around the 618 fib that I have drawn. The Pound Swiss, right around the 236 30% zone that I've drawn. This is another one where if we get on the right-hand side of the trend line, I like this Pound Swiss, even heading higher. My target on this one is 120. If we pull back a little bit deeper, that's okay. I'm still looking at that 50618 zone to buy back in, but obviously you can just wait for the trend line to break. New Zealand Swiss, turning okay, but we have some trend line support near these lows. We're looking to see if we can break this trend line. There's a lot of upside on this New Zealand Swiss. I'm looking to get back to 6,000. So not in a hurry on this pair, enjoying some positive swap, 5.5% for the Kiwi, 1.25 now for the Swiss. That will certainly help give me a little bit more positive yield on these positions. And then dollar Swiss is the last one, turning really nicely right around that 38%. Again, not saying that this is the bottom, but I'll be watching this behavior. So if we're down here, let's say we, poke a little bit lower lows, I will be watching for a trend line break, maybe a bit more aggressive before I start to add, out in this area to go long and stay long. My target on this one is 96 minimum. 98 would be, let's talk Goldilocks. This would be like, Papa Bear's porridge. 98 would be Mama Bear's porridge, and then 1.00 would be the baby. So that's my ideal position for profit, is at parity 1.00. But I'll still be happy in a lot of profit if we get back towards this 96 area. I really do like this 96 to 98 window right there where I'm hovering. If you can see my chart right there, 96 to 9800 on the dollar Swiss. So this to me is also a nice head and shoulders pattern. Left shoulder, head to neckline. I'm just trying to wait for a bit more confirmation on the right shoulder. Maybe get a couple of trades in to see if there's a head start on the right shoulder, break above the neckline, measure this move out. Even if we just did symmetry here, low to high, low to high, again, I'm looking for that same type of pocket. Or if we run up any higher, we're just above that parity mark at 1.00. That's dollar Swiss. So again, lovely to see the Swiss franc taking some action and cutting rates. A nice big drop in the Swiss franc today. Pleased with that overall. Take a look at some other crosses, and we'll get into some stocks. If you have any requests, let me know. Linda, good morning. What do you think about the Nasdaq and the S&P? I'll talk about that. I mean, that's always part of the weather report. So down in the day, led by semiconductors. I personally would like to see a little bit of profit taking. We've mentioned this over the last couple of weeks on the SPY. The daily time frame is overbought with divergence. The weekly overbought with divergence. So this candle, for example, I think is something that we watch by the end of tomorrow. One thing that will be very important to see here on the SPY and the Qs weekly would be if this wick gets even larger to the north. So an example would be this: if we have a long wick to the north in this tiny little body, that might be a nice setup for an evening star where next week's trading may be pretty bearish. Okay, so if we have a decision week next week, that could be, again, just, it doesn't have to, obviously, it doesn't guarantee anything, but having a big indecision candle, if that's the case, bullish decision into an overextended condition with divergence. If we have a bullish decision followed by indecision, followed by bearish decision, that's a very classic textbook morning star, and especially on a higher time frame, that would make some sense and see if that's kind of self-fulfilling. So where we're at right now, I mean, I know that today is a dip. It's not down a ton. We're down 1/3 of 1% on the SPY. We're down almost 1% on the Qs. The Dow, we've seen some divergence here the last couple of weeks where the Dow is underperforming the SPY and underperforming the Qs, and the DIA is actually getting some love today. So the DIA is actually ripping. I mean, it's up. Well, not ripping. I hate like the hyperbole in trading. It's like, look, it is what it is. So we're up 0.7%, but the differential between being down, 0.9 or 0.9%, 0.93 on the this is Nasdaq futures, right? So look at that large wick to the north. I kind of love the look of that for a bit of a correction. Same thing here on the Qs. So very bullish decision candle. If we have a nice indecision candle, that could set us up for a nice, like I said, evening star. And if I said morning star earlier, I meant that meant evening star because it's a topping formation. So if I said that earlier, I'm correcting it to now evening star, where it'd be bullish decision, indecision, bearish decision, and we look for price to decision wise head down a little bit lower and force a bit of a correction. Still go to the Nvidia? Yes, I am. My trade on Nvidia. Look, I have some partial shares of Nvidia. I've been parceling in when it was in the hundreds, like $400, $500, $600. But I don't have a ton of shares of Nvidia. What I'm doing instead is I'm trading ratio spreads. So ratio spread is I'm willing to own this, especially now that we've had this 10-for-1 split, so I can own it a lot cheaper. And I believe my positions here on my ratio spread, they're pretty low. Let me take a look here. So I have a ratio spread from 95 down to 80 on that July 26 expiration. I collected 54 cents on Nvidia. I also have all of these broken wing butterflies that were from the 10-for-1 split. So I did, 8 contracts on the sell side, 4 contracts on the wings. Those have now been extended for 10-to-1. So I have an 80, 40, and 40. It's a broken wing butterfly that each one I collected about 50 cents. So let's see, that was profitable. This one is going to be profitable, and this one is going to be profitable. These will actually all expire tomorrow. We're very, very safe on these positions, so that'll be a nice little $200 to $300 profit for Nvidia for Friday, and then a little ratio spread where I'm hoping that we can own it. If not, I'm just going to continue to do a lot of ratio spreads. I don't mind putting the shares in. I might do some cash secured puts. I might do something synthetic, but I'm just going to focus on if I get assigned, I want to own it. I might do some wide put spreads on Nvidia and be willing to own it. And just there's a high enough IV on it that I should be able to collect a decent amount of premium. It's one of the most liquid stocks in the world right now. It's I do want to know if the sell off today is is it the jockey the jockeying from 1, 2, and 3? Is it Microsoft, Apple, Nvidia? Who has the largest market cap right now? Nvidia's down to 3.23. Take a look at Microsoft. Microsoft's at 3.3. So Microsoft's hanging in there a little bit higher on the market cap. Apple at 3.22. So right now the ranking, you have Microsoft, Nvidia, Apple, numbers 1, 2, and 3 on market cap for now. Apple, again, after a big rip to the upside, I didn't hear a lot of positivity out of the whatever the WWDC was for Apple when they finally got into, Siri's going to have a little AI component to it, or open AI component. Market got excited, more so than what I heard actual like enthusiasts of Apple. But doesn't matter. I'm still long Apple. I own the shares under 170, and I I have a covered call at $200 that I'm looking to roll. I might still get it called away if price stays where it is. If it falls back all the way below $200, then I'll just continue to lower my cost basis on Apple. So you got to wonder out there if there's a lot of profit taking right now. We're about the halfway point of the year. This isn't necessarily the September effect, but we're due. We're certainly due for a pullback. So on this weekly candle, like I said, on the S&P, if this tomorrow gives us a little bit more wick to the north and leaves a larger indecision candle, then it looks like we're possibly heading down again for a bit of a correction. Now, I say that, but look at the trends, right? I mean, we're still in an uptrend, even if we pull back. Okay. I mean, if we pull back and have another down day tomorrow, I mean, I could see the market pulling back and filling the CPI gap from last week. That would make some sense that we can find some demand down here. We can find some liquidity, and then we look to see if this trails off, maybe a little bit of a counter trend line break in here, and then the market tries to justify another higher high. We are at 30 or 31 all-time highs for the year on the SPY. That's an impressive run. We are off to one of the best starts ever this far into an election year at the halfway point. So we're also at one of the biggest discrepancies between large cap and small cap outperformance since 1999. We have a lot of extremes. We have a lot of overbought conditions. We have a lot of divergence. Doesn't mean that I'm calling tops here. I mean, there's a saying like there's no such thing as an overbought market in the stock market, which in a sense is true. Okay. But when unanimously the market breadth is very narrow, the market cap is super highly concentrated, that does make things a little scary. If you're long the SPY and long the Qs, guess what? You're essentially long the same thing. You're long Apple and Microsoft and Nvidia, right? Which have been doing great, but you're long all of the most concentrated stocks right now that have been dragging this market higher. And that's why I said I'm surprised. And it's nice to see this, but the Dow is actually up today, right? The Dow is up today. Let's see if the Russell's hanging in there. Probably not because it's small cap, but what's the Russell doing? Russell's flat. So the DIA is up, the SPY is down, the Qs are down. We'll just see how nasty it gets. Maybe not that bad. Maybe it's just a bit of a down day. The market stabilizes, but again, curious to see with tomorrow being a monthly expiration. I think tomorrow is, let's go SPY and SPX. So let's go SPX. So we just have a weekly expiration, and then next week we have the quarterly expiration. So I mean, maybe there's some heavy profit taking for the end of the quarter. It would make some sense because we've had just more all-time highs. Okay. All right. So to answer your question there, San, about S&P and NASDAQ, I mean, it's nice to see a bit of a correction and some respect with some of the overbought conditions we've seen. Let's see here. NVIDIA, huge engulfing reversal today. I mean, look, I'd welcome it. I'd welcome it. I mean, here's the trend line. Here's what I see on the charts. It is possible. Like, let's see what NVIDIA's correction was from this high that we put in. NVIDIA had about a 20% correction right in there. I'm not putting it past it for a high volatility stock like NVIDIA that could do no wrong. Look, it's up. This rip right here is a 86% rally. Okay, that's from the lows in April. This rally right here was probably close to triple digits. That was a 105. So we had a 105% rally, a pullback about 20%, and then an 85, 86% rally. So look, a 15 to 25% pullback is totally fine. And in a way, it's like, I kind of like to see it. The trend line support is all the way back here. I mean, if we fall violently, then sure, we come back to, 105 or $100. But if this is, a big sell candle, a little bit of indecision, maybe we peak again and start to decline. I mean, there could be a kind of a topping candle, some inside candle trading, or just more momentum to the downside because the profit taking becomes pretty heavy. So like I said, I'm still long NVIDIA, but I'd like to see it pull back to more attractive levels to start repositioning. If we get a decent sell-off, I'm going to position for things down here to be long. Okay. I'd probably even put in some credit spreads here, collect as much premium as possible. I'd put some out of the money credit spreads here. I'd also start looking at some call options for maybe a leap. Maybe I do a leap on NVIDIA out for the next 12 plus months. But it depends on how much I'm paying for that. If I'm doing a leap, I essentially want to turn it into a calendar spread or diagonal spread where I can buy out further and then sell against it to lower the cost basis of that total debit. Okay. So anyway, I'll be watching a video, but like I said, for the heat map today, it's all led by, some of the household names here. Apple's down, Nvidia's down. Guess what? The whole market's going with it. Energy's up. Okay. So this shouldn't be a surprise. If we have major large cap stocks down, like Microsoft, like Apple, like Nvidia, guess what happens? That is your high concentration house of cards, right? I don't think these are going to collapse, but I do think that a little bit of pressure to the downside and some profit taking on these three stocks and just these three stocks certainly brings in some pressure to the downside. Okay. But as I say that, I'm just watching price today. I mean, it's 2 o'clock right now, and there is there's a fight. The bulls are still in there to fight. This is where we, started the day, peaked up to 550, sold off about $5, and we're back up cutting that move in half. Okay. But you got to wonder, with these lows being taken out right here, is this a high, low, lower high, and then a lower low that's coming to finish out the week? If I zoom out a little bit more, let me go a little bit smaller here, or I'll just go to a different time frame. We'll go to the 15-minute chart. There we go. So this gap from CPI data, we just hovered around that for a while, had another break to the upside. I'm not drawing that very well. Just give me a second. So we have, this is the gap fill, okay? And this is the consolidation zone that was finally another topping point from Monday. Now, I will say that Monday was a very odd day. In my opinion, Monday was weird. Monday was a super directional day, but I just wonder, maybe the market tried to kind of front run the holiday week, and having markets close on Wednesday disrupt the trading. So perhaps the market got a head start just jumping out on Monday with a big $6 move, and here we are just topping out a little bit. So like I said, if we go high, low, lower high, lower low, let's see if the pressure continues to stay, to the downside, at least for a reasonable correction. Levels I'd be watching for the next day would be if we came back into this 545, 544 zone, or came back any lower into this area. Just to see if, again, it's $4, $5, $6 to the downside. The markets typically sell off a little bit more aggressively. But you never know. This market could be high, low, we finish halfway, and then tomorrow's indecision, and then all the drama happens next week because it's quarterly expiration. Maybe that's the trade. Okay. So, all right, we did a lot of currency pairs. If you have any stocks you want me to take a look at, let me know. I'll do some peripheral thinking about 60. This is still my line in the sand of fortuness. I would like to see 105.60 get a convincing break to the upside. Oil is continuing to push higher. I'm long on crude oil futures. I put in essentially a trade where my credit spread is down here, and reversal pattern. Let me draw this in black. If we did a reversal pattern where this is, left tip, center tip, if we stumble a little bit on crude oil, I'm still looking for oil to go higher. If we're having this conversation in the next couple of weeks, oil's at 84, oil's at 88, you can't be super optimistic or positive about what inflation data is going to look like coming into next month, right? When we saw inflation data ticking higher in March and April, a lot of it was because oil was heading higher off that major $67 support, right? So if oil is indeed, well above $80, I think the Fed's going to be, trying to jawbone and trying to talk down a little bit and trying to stick with that pseudo hawkish narrative that they came in I guess it was last week with CPI and FOMC, right? So anyway, I'm long on oil, but my stop loss is right down below the swing at 72.50. Gold and silver. Gold is up a decent amount now. That's good. I'm still holding shares of GLD off these equal lows. And so I'm sure a lot of traders are out there curious about gold. Does it break the trend line? Do we get a convincing move right here? If we do get a convincing move, possibly come back and retest the highs. I've said for the last several weeks now that this is probably a broadening pattern. So we have some indecision at the highs, some indecision at the lows, and this might just remain choppy for a little bit longer. But medium term, long term, I still like long silver. At least we know where big liquidity sits on Nvidia. That's true. Silver ripping to the upside right now, and I've got to wonder, am I going to get any assignment on SLV? Let me see my expirations here on SLV. I thought my expirations were out to July. They probably are, but I'm looking to take some assignment on SLV. Okay, I've got a 29, 28, 27, 26, all puts If I get assigned, I'm taking on 200 shares, willing to take up to 800 shares of SLV with a break even at 27.50. But if silver rips the way that it is, I might not get assigned, which again isn't that big of a deal. I mean, I collected a total of, let's see here, $3.29. That should have been, yeah. So I collected a total of $3.29 with a couple contracts each. That should be a decent chunk of profit. If I don't take any assignment, if I take any assignment, great. I'm just going to sit on it longer. But time is on my side if we're going to see silver move to the upside. So I could also I actually wonder. I'll talk about this maybe tomorrow in class. But I wonder if I could take a look and do another kind of a leap on SLV. I would buy a deep in the money call and then sell against that and see if this appreciates. The deeper in the money calls, you get the higher delta. So if you buy like a 70, 75, or 80 delta, basically when price goes up and direction goes your way, that delta gets closer and closer to being 1-for-1. So if the SLV goes up $1, my call option goes up $1, as opposed to my call option only going up 70 to 75 cents. Right. So I tend to do that. If I like a position, I'm bullish on something, I tend to be willing to pay for a deeper in the money call as opposed to speculating on the out of the money calls, just because time doesn't work in your favor at all. Right. But if you're deep in the money, you have way less of that kind of delta sensitivity because you're buying it at a 70 plus delta anyway. Plus, if you go out farther in time, it's way less sensitive to the time decay. You have a much bigger window to make sure you can grab some profit there if you're right directionally. So that's gold and silver. GLD I still own right around this 212 handle. It's up to 218. I suppose I could see this right now. Let me check on something here. If I do a position, see if I can get rid of these GLD. So I own some shares. If I sold a call against GLD right now, if I went out, let's say 45 days, and my break even is around 212. Okay, 212.78. If I sell a call out 43 days, what's the 227 or the two? I mean, I probably sell like this. This is a 16 delta for 232.50. So GLD 232. I mean, that would be making some fresh highs. Let me see what this is going to set me back as far as buying power, because I'm not covering the entire. Well, I have 25 shares of GLD for my first tranche, and I want to ultimately make it more. It's just this was way more expensive than silver. SLV was a $20 stock. This is a $200 stock. So I'm curious if I were to cover this at 227 or 232. If I cover this for one contract, let me see what this is going to cost me. That's what I thought. So buying power is going to cost me $4,300, but I'm going to lower my cost basis a ton. I would essentially get $1.04 times 4. I'd lower my cost basis by almost $4. So I'd actually own GLD at 214. I can do this. I'm going to do this. So this is out 43 days. I'm going to collect $1.04. And if silver rips, I'm going to move it. I'm going to roll it. I'm not going to let this stock get called away, but I'm going to use this to let my position take on the covered call, lower my cost basis, and bring me down. So 218 is the current price. My fill was 212. If I take this out for $1 right now, I'm just going to sell one contract against it. So let me review that, send it right here. Okay, so it's about 3K in margin to tie up this trade. I'm fine with that. That's a 16 delta 232.50 call, send, filled. Perfect. Similar, and I'm just going to double check this for everyone. So GLD, own the 25 shares. Let me double check and make sure if I do the same trade, what's my buying power here? Everyone should have plenty of buying power to sell this call option. $5.9732 ties up $3,000. Okay, fine. Filled. Have some GLD there. Trade. 43 days out, 232. Let me see what this buying power is. 805.1. Yep, that's what I thought. So this is essentially like a naked call. I'm not going to take the trade on that. What I could do, though, is I could turn this into something synthetic. I could just do a bear call spread. But unfortunately, I'm only getting 26 cents for that. Maybe I could do a wide bear call spread. But that might not be in my best interest either. If I went up I guess I could I could tie up way less capital. Probability of this trade is still very high, 232 to 255. Collect about 90 cents credit. I think I'm going to do this. I'll take about half the profit if I want to. I'm going to set the trade up here. This is basically a synthetic covered call where rather than tying it up, and so here's the reality. I have 25 shares of GLD, but I want 100 plus shares of GLD. But for right now, for the 25, I'm going to cover it like I have 100 shares. And so I'm going to use in this place for this particular account. This is an IRA account. I'm going to use a bear call spread, but I'm just going to widen it out so I can get a decent amount of credit. Okay, and I can move this and go further in duration, but I'm pretty sure for the next, let's say 21 days, we're probably not going to 232 on gold, more than likely. So I will take my chances here, try to get 40 to 50 cents, lower my cost basis. That's the equivalent of lowering my cost basis. Let's say I get the full 90 cents out of this. Well, if I get the full 90 cents out of it, then I will be lowering my cost basis by roughly, it'd be that times 4. So it'd be roughly a $3.60 discount to my ownership. So let me see here. If I did a 35 by 55, I go 66 cents. There's a 91% chance of profit on this trade. I'm going to take this trade right here for the IRA. So 66 cents. See if I can get 66 cents in this one. Filled at 66. Okay. Check this account here. Gold, GLD. Set this one up for the 232. Take off $1. This one should be okay. Filled there. $232.50. Okay, this one I'm going to turn into a spread. So the 235 by 255. Grab this one for 66 cents, 7634. Filled there. And the 232 here, grab $1.05. And then this one's going to be another spread. Yep. So sell the 235, buy the 255, grab 66 cents. There. Okay, so lower the cost basis on GLD. That's a 232 and a 230 or 232.50. So a 232.50 and 235 covered call levels out for this is an August 2nd expiration, I think. August 2nd, yep. I'll make a note on here, review at 21 DTE. So if I can take more than 50% of that credit, I'll probably just take it and redeploy it. But I still think silver is fairly sideways. If we just rip like crazy on the upside, then I will roll this out another maybe month and try to give myself a little bit more time. But that's all. So a little bit of housekeeping there, but I like it overall. And things are looking pretty good on the day. Like I said, I was up about 10 grand to start the session. I'm up 12.4. No complaints right there. Let's see what happens for the remainder of the day. I'm curious where tomorrow closes. And that's it. Elizabeth asking for Swiss crosses. I did the Swiss early on. One thing that's really exciting, Elizabeth, if you've been following me at all, I've been short against the Swiss. So I'm long Aussie Swiss, long CAD Swiss, long Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss. I'm long on all those. And the Swiss actually cut rates today to 1.25%. So that is a huge bonus for the direction I've been trading, and it's the Swiss National Bank kind of falling in line with my technical plan, which is I want the positive swap, which is a fundamental side, and I also want the technical appreciation in the currency pairs, so I can go after my 400 to 500 pips of distance on a lot of these currencies. So I like it. It's looking good. Hopefully this continues to be the trend. This is now 2 cuts from the Swiss National Bank, which is arguably one of the more dovish positions right now for a central bank, considering the other ones have paused and paused and paused. We saw the ECB cut a couple weeks ago. We saw the BOC cut as well. Bank of England, I don't see them doing anything. They kept it at 5.25 for right now, and so the pound remains somewhat resilient. The euro pound position that we're looking for a sell trade here. We still haven't gotten the fill yet. We're looking for this. We had a nice break of this floor, and so I was looking for a straight line. So right in here. So we put in a sell trade right there to sell it, and then a stop loss just above the swing, and then looking to see if we can retest the low or go lower. So I'm looking for a fill on the euro pound to continue to head down. With the Bank of England holding rates and the ECB cutting, we'll see if that trade continues to push lower towards these multi-year lows, which is around March 2022. Okay, let's see here. Daniel, how are you, man? Good to see you. You just cranking out some profits on the NASDAQ futures? Probably. Decent little moving day today, so hopefully you were maybe nabbing some shorts. If you were short futures today, that'd be good. Or long now. I mean, I guess we had a decent enough pullback. But yeah, I mean, it's interesting. I'm looking at these levels here. Contract sizes are really, really large on the gamma side. So, 2577 is a large number. We hit that first thing this morning, but there was clearly some institutional flow pushing this down. One thing, if you have been paying attention, if you join me in any of those A1 trading sessions, we have been watching at the commitment of traders and watching where smart money is flowing. There's smart money that's flowing out of the indexes right now, at least for some positioning. I watched a webinar this week on just professional hedging, and all it really is, it's stuff that I've been doing for years, but it's pretty simple. One is you can just buy puts, but I like particularly it's called a collar. If I own shares, it'd be this. So let's say I did this on Alibaba. So I own some shares of Alibaba. No, I'm sorry, Baidu. I did this on Baidu. So I own some shares of Baidu right now. And what I did was I have a covered call on Baidu up to $100. All right. I own the shares personally at $90. For my fund, we own the shares around $96.73 to $97.78, depending on the fills. So anyway, I mean, let's say $90 on the low side, or $97, $98 on the high side. But what I did was I basically have a covered call at 100 plus, and then I finance that because I'm collecting credit on the covered call. I finance a long put. So my put doesn't cost me anything. My covered call doesn't cost me anything. It's essentially a wash. But what it does is it allows me to capitalize on any downward pressure, and I can make some money on a long put. So I have an $85 long put, and if we push down into these 80s, which should be all the way potentially down into the 70s for the next maybe 45 or 60 days, if that is the case, and I can take advantage of maybe let's say $3, $4, $5 credit, all that's going to do is lower my cost basis even further. So I bring, my $90 price down to 85. I bring my 97 down to 92. A little bit easier to repair the stock. I still own it. I'm still in a bit of a drawdown, but this is also a good technical level where I'm much more interested in getting long, right around this double bottom zone. And so I just thought, it's a good way to be protected and not just lower the cost basis through covered calls, but a collar is a good way to do that. So again, that is, you're selling a covered call, you're buying a put at the money or just slightly out of the money. You're essentially making that trade a wash, but you're protected to the downside, and then you also have profit on the upside as a net position. So if let's say, Baidu reverses and heads up to $100+, I'll make $2 to $3 a share, right? And I'm still protected on the downside. It didn't cost me anything. Fed discount money, they have limited access to keep pushing up as far as want to. Well, I listened to a podcast yesterday. This kind of bullish soft landing scenario. Right now, politically, it's in kind of everyone's best interest to not have something super disruptive. The Fed to keep things stable. Politicians during election year especially don't want to have some crazy crisis on their hands, and certainly not fall into their administration. So there is a reason for fiscal stimulus and Fed monetary policy to kind of work in tandem to keep things afloat. And the reality is, look, we know the Fed put is alive and well. We know the Fed put has worked for the last several decades. And I'm not saying that it's always going to work, but it certainly seems like the Fed wants to take action. The market takes notice. And so right now, we're still in this weird scenario where even the dot plot that was revealed, the Fed is only talking about maybe one cut this year. Maybe one cut. And going to like let's say the next 2 years, I don't know if the watch tool shows this, but even the next 2 years, the market's only expecting like the high ends. Actually, I'm sorry, like the extent of these rate cuts over the next couple of years, the market's expecting the rates to ultimately get down to about 3.75 to 4%. So we're only talking about 150 basis points worth of cuts over a couple years. So even if we're 25 basis points for the next, 2 years, and every quarter we cut by 25 basis points, that's only going to be a 2% cut. That puts us at, 3.5%. So, I mean, I think it's good for a lot of things. It certainly would help the housing market, but I do think that under the hood we have some vulnerability with softening labor. Jobless claims are going up, but there's a trade-off. I mean, we could possibly see job numbers going up because of a population influx, while also seeing this transition into AI, and corporate profits are trying to maintain margins, and to do that they're cutting people. So anyway, it's a lot of speculation out a couple of years, but the longer term curve is only expecting the Fed to be cutting by about 2% if we're going to kind of normalize interest rates. So, this is why I have some exposure on bonds. This is why I'm long on gold and silver. I've got some diversification in the portfolio, but I'm long on TLT right now, and it's looking better. We're up to $94 right now. I'd like to see this thing continue to push higher, especially if the market is trying to get ahead of maybe a 10-year yield dip. So if the 10-year yield continues to push lower, or better yet, the 20-year yield continues to push lower, that's going to help my TLT position. So if the 20-year yield is going down, that means my 20-year bond is going up. And so directionally, I would love to see a TLT sitting at $100+. That's actually where this thing is going to get covered again. So I will probably go out and cover it again. I'm doing a calendar spread / diagonal spread on a TLT long position out to. I did this one for a long time. This is out to 2026. So I was looking to see if we have any type of calamity in the stock market, and the bond market gets a rip, or we have some type of crazy move in interest rates, or the yields drop like crazy, then the bonds can rip. So and this could all play out, later this year. This could play out in 2025. You got to wonder if the positive correlation between equities up and bonds up is going to change. Historically, that's why you've had this 60-40 portfolio, because equities up, bonds down, or equities down, bonds up. It's been an inverse correlation. So that's your protection, right? But it's not been that way. The last 3, 4, 5 years, it's essentially been positively correlated. If the markets are up, bonds are flat, or the bonds are up. Markets down, bonds are flat, or bonds are down. There really hasn't been like the big savior of bonds going up. But there's also been a lot more sensitivity on those yields because interest rates have gone crazy places. Okay. So, yeah, I'll save that Lambo for later. I'd rather have a Corvette, to be honest. They turn your head just like a Lambo does, and they're way cheaper. But if I live in a place with no winter, then maybe I consider the sports car, but probably not. I think I'm good with the SUV. So, all right. I think that's it. I think for a little market recap, I just want to jump in, say hi. I was out this morning, so just popping back in, taking a look at things, and then we'll see how the market wants to finish up for the day. Like I said, looking at how the week is going to close up, we'll have a session tomorrow morning. I'll be live at 9 a.m. Eastern time, and we'll wrap up for the week. So, like I said, a little bit more pressure to the downside would actually be great. One of my positions could be a nice payout that way. My defined risk is about $400. My max profit is 500 and change. If I get it right, and awesome. I mean, it's essentially like a 1.2 to 1 when it's all said and done with kind of my peak profit with a call condor trade. Other than that, took profit this morning on the SPY contract, took profit on my futures contract. I'm up on the day for P&L. A lot of my, kind of hedging, if you will, is helping. And I put on a collar for my Baidu trade. Yeah, Baidu trade. And then I just added that covered call on GLD. So a little bit of management there, nothing crazy. And I haven't seen what crypto's been doing. I'm pretty sure nothing. So Bitcoin is hanging in there at 65. Ethereum hanging in there at 35. So yeah, pretty slow on the crypto front right now. I'll put a chart alarm here at the highs at 4,100. Recent highs. That's not the all-time highs on Ethereum, but we're gonna wait and see what happens with Ethereum when it comes to maybe this spot ETF getting approved. So, all right. 86 CRX 50 miles a gallon. That's probably more my style. I do need to carry some golf clubs, and I oftentimes I have some passengers I'd like to be comfortable. So, but anyway, it's just a means of conveyance, right? Convenience. Conveyance? Is that the word? Mode of transportation. Yeah, conveyance. There you go. That was a Cleveland line from Family Guy. It's my only mode of conveyance. All right, anyway, I'll let you go for today. Come back and join me tomorrow, 9 o'clock Eastern time. right here on youtube.com/Chris Pulver. Or wherever else I stream, I'm out there. I push all these at the same time. So wherever you're tuning in, I appreciate it. One thing I would like to do, if you tune in you're tuned in live or watch the recording, please hit the thumbs up button. It does make a big difference. I'm getting anywhere between 200 and 300 people live. If we get 200 to 300 likes, that does kind of help me saturate the algorithm, let YouTube say, hey man, this service is doing well and people like it. So that feedback goes a long ways. Golf clubs on top? No thanks. I care too much about my golf clubs. Hard case or not, I'm not putting them on top of my car. All right, sounds good. All right, buddy. Take care. I'll see you tomorrow morning, 9 o'clock Eastern time. Check you then.